Hey, it's Mike Lynch with AmeriFirst Financial, and it's time for your Monday morning mortgage update for the week of August the 15th. I know a lot of you have your kids going to school this week, so blessings to everybody and hope it's a great first day for all your kids. So let's talk about last week and what is going to happen this week. Last week, we actually saw nothing happen with rates. The market was flat. We definitely had some volatility, but ended the same way it started. We had inflationary numbers come out on Wednesday and Thursday, and there was a moderate increase. Doesn't mean that we're reducing inflation. It just didn't go up as high as it's been going up. We're still at a 40-plus year high. Still bad news, but at least it didn't go up as high as it has been. And again, no changes to rates. So what are the three things we're looking at this week? We're looking at retail sales. We're looking at the Fed. Fed's going to be talking a little bit before their September meeting, and then a bunch of data, housing data primarily this week. So retail sales. Retail sales will come out for the July numbers on Wednesday. And really what we're going to be looking for is, are people buying things? Now, the last number that came out showed that retail sales were up, but it wasn't because people were buying more. It's just because the prices were up. And so those numbers were higher, but for the wrong reason. So now that we've had inflation, now that those prices have been up, will we see these retail sale numbers come down? And remember, if this shows that the economy is slowing, this means that we're definitely getting into the recession that we know we're in. And what's that really look like coming into the big retail season of Christmas and the holidays? Second thing is Fed. So a lot of Fed members are going to speak this week, headed into the September Fed meeting, and they're posturing, they're giving their insight. Remember, the Fed is going to meet in September, and they're probably going to do another 0.75 of a point rate hike. That's the expectation. Again, they're curbing inflation. We've talked about that so much. And so a lot of focus will be on what they say. What's their position? Are they going to raise it 0.75? Are they going to raise it 0.5? Now that the inflation numbers are moderating increase. And again, they're not going down. Third thing is data. There's manufacturing and housing data. So manufacturing is important. Basically, it shows us are businesses spending money? Are they making more stuff? Now, the number we had last month showed that the manufacturing numbers were up, but for the wrong reasons. If they did a survey, 7 out of 8 manufacturers say that they would actually make more, but they couldn't find workers. They couldn't find people to work. So what are these numbers going to look like this week? New York Fed manufacturing number, New York manufacturing numbers came out, and they were down 31%. Now that doesn't represent the country, it just represents New York. So what are some of those numbers going to look like? Is it going to show our economy is weakening and slowing down? We'll definitely pay attention to that. And a lot of housing data this week, new home sales on Wednesday. One report that came out today was builder sentiment, home builder sentiment. It was below 50%. Now this is a big number. It means that builders don't have a lot of confidence in what the future housing market looks like. Anything under 50% is a contraction in building. And so obviously not a great number. We know the housing market is cooling. We know there's a correction. But what does this look like long term? After the housing crisis in 8, 9, and 10, building basically stopped. And there's a lot of people that believe that our low inventory that we have right now is a result of that building stopping and just a freeze on building, and people got out of the business. And they stayed out of the business for a long time, and that building never caught back up. So, we have 12 million new households that didn't exist in 2008, 9, and 10 that we have those now. And that just the numbers of more millennials buying houses, more people getting into the housing market means that demand was up, and there weren't enough homes to meet the demand. And we know that building a house isn't like making a car. You can't just pop them off the line. It takes time, and building costs have gone up. So now that builders are slowing down or even retracting in their building, demand isn't slowing as far as new households. The increased interest rates have slowed demand a little bit, but we're still at a 3-month inventory nationwide, and we know a 6-month inventory of homes is a normal market. So we're still below a normal market. It'll be interesting to see if we do see a lasting contraction in building, what that means long term to the housing market, with people that want to buy homes once these rates come back down in a recession, if that's going to have a long-term impact. So a lot of stuff coming out this week. We expect a very, very volatile week. We are in a locking position. We're not playing any games with locking rates and people's money. If you have any questions about the market, please let me know. If you know somebody can benefit from this video, please forward it to them. Have a fantastic day, and we'll talk to you soon. Bye-bye.